Ayman, welcome to the show.
Hey Eddie, nice to meet you.
So let's just start with who you are and what Dare does for those that don't know.
Absolutely. So my name's Ayman Rahman. I'm the CEO of Dare. Dare is a energy trading liquidity provider. What does that actually mean? Well, that means for energy financial contracts across the globe, we offer anyone in the market ability to buy or sell those financial contracts. How do we do that? That's kind of how we make money, right? So we figure out where we see the value of things relative to other things. And we're always there for market participants to buy or sell. So liquidity provision is our business.
Great. And having known you, just to put it into perspective, how many kind of contracts of oil are you actually trading a day?
So we're doing about 134 million barrels of oil financial contracts per day.
Great. And just to put into perspective for the audience, I think, and you're the oil specialist, but I think the world consumes about 100 million barrels of oil a day.
Yeah, that's right.
So you're trading more than what the world consumes.
Absolutely. It's a weird quirk of financial markets that, the derivatives are actually bigger than the physical kind of production and demand. But yeah, that's absolutely right.
And that's a good point. So you don't trade physical oil, right? It's all derivatives and...
Agreed. Some of these contracts are physically delivered, but we won't trade them into physical delivery and we won't actually touch the black stuff. Everything we do is on the financial side.
Understood. So if we take a step back, what's your personal journey been like to even get into trading in the first place?
So, if I start back in kind of my school years, I was pretty academic as a kid, pushed quite hard by my parents to do well and excel in kind of quantitative subjects and things like that. But like a lot of Asian kids, I think my parents' dream was for me to be a doctor, right? My dad's in the medical profession. That was his dream for me to follow in his footsteps. And my parents really pushed me in that kind of way. I remember at 16 years old, I went to this medical kind of conference thing at Nottingham University. And it was all about kind of lectures that you'd do if you're in med school, understanding biology, chemistry, all of that kind of stuff. 3 days out there, and I came back home and I just said to my parents, like, I can't do this. Like, it's not for me. I'm not interested at all. And then my parents said to me, like, well, what do you actually want to do? And I was like, well, look, I keep reading about these financial kind of masters of the universe in the Sunday Times and things like that. That sounds really interesting and it seems mathsy and it seems analytical. Like, I want to go and pursue that. And yet my dad was like, well, what are you actually going to get out of that? Like, what's the dream? Like, what's the point? I was like, look, Dad, I want a career where I could actually make $10 million. Like, I don't ever see that being a possibility as a doctor. And I distinctly remember my dad saying to me, and we laugh about this, he said to me, you'll never make 10 million quid. You will never make 10 million quid. Like, here's a reality check. Like, go and do something safe and stable and have a good life.
Were they disappointed that you took that choice? Or did they come round to it in the end?
They, I think, were initially kind of disappointed, but to give them credit where credit's due, they let me make, I guess, what they thought was a mistake at the time, but they let me make it and they gave me that space. So credit, to my parents for that. They weren't super happy with it, but, they gave me space and I respect them for that and the support, of course, up to that point and beyond. So in line with that, I pursued that as a career and I went into economics, right? So I studied economics at UCL. And pretty much the whole time I was there, I kind of obsessed about how to get a job in trading, right? And it wasn't for me about pursuing a degree or trying to get a first class or anything like that. It was, how do I meet the right people? How do I get into the right institutions? And how do I get some relevant experience? And having grown up in Plymouth in Southwest England and not having kind of family connections in investment banks and stuff like that, I had a very, very green CV before I came to London. I knew that. So I was like, okay, well, look, how am I going to make myself stand out, right? And I went through a process over the 3 years applying for loads and loads of jobs. I think in total, I did about 300 applications, right? We're talking spring weeks, summer internships, graduate jobs, and nothing was latching. And it got to like my final exams. I'm talking to my parents like, okay, what am I going to do? And the I told you so's are starting to come in. And it's like, well, it's not a secure career path, right? You kind of knew this was an option. So at that point, I actually settled on getting into doing a financial computing PhD, which for anyone that knows me is hilarious because I'm terrible with computers. But UCL were kind enough to accept me onto their program for financial computing, and I basically accepted my place. And as I was sitting, like I think one of my very last exams, I had an interview with a really small energy trading firm that had existed for about a year. It had been set up by the previous global head of oil trading at JP Morgan. And I had an interview on the same day as my exam. So I'd like distinctly remember like doing my interview, running there, finishing it off, and then coming back to sit my finals. And, I thought like, this is one interview that I've had a few here and there, but it's not really panned out. So my exam's finished, exam season's over, we're going into the summer, everyone's going off to their own thing. And I get a call a couple of days later from the CEO of that firm, and he's offered me a job. So that was huge for me. And I remember like the emotional relief at that time, like having gone through so many applications, so much difficulty. And then he told me the salary. And my best mate in uni and one of my co-founders here, Jonathan Uy, he'd recently got a job at RBS as a graduate on their trading program. So me and both wanted to go into trading. So I'd asked him like, okay, so what's your starting salary? And he'd tell me, oh look, it's 55k. So I was like, heck, it's 2012, 55k. That's pretty good money, right? Like, So I was expecting something similar at a trading firm with the caliber of people. And they said to me, well, the starting salary is £25,000.
Okay.
I was like, I was going to get 18k a year tax-free from doing the PhD. I thought, look, I'll take a chance, roll the dice and see what happens. So I joined this small firm, not knowing too much about it, with a high caliber of founder, but not a great track record because it only existed for a short amount of time. What was interesting when I joined that company was the philosophy there. So the CEO is pretty eccentric, and he had this kind of theory that you could train anyone to trade if they were smart enough and hungry enough. Mm-hmm. So in an investment bank, you'd spend many years going through the program, right? Yeah. Like three years analyst, 2 years associate, and you're probably at like say VP or senior associate before you're actually responsible for any risk. So the CEO at the time had a completely different philosophy, and he threw people right in at the deep end. I was hired in a group of 6 junior traders, and within 6 months, 5 of them were gone. I don't think it was a very good business model, but for me, for whatever reason, the stars aligned, and trading and that style of trading aligned with my skill set and what I enjoyed and what I was good at. Mm-hmm. And that became like a huge accelerant and a determining factor for a lot of the success that I've gone on to have since then. Right. Before I started that company, I didn't really know what hard work was, right? I think the education system and the university system allows certain kind of high-performing academic people to coast, particularly towards A-levels, year 13 and in uni. Like I had my foot off the pedal and was focused on other things and distracted and obviously growing up and life and stuff like that. And suddenly you're at this place where it's like Goldman Sachs, Morgan Stanley and JP Morgan alumni, and is expecting that same working culture. So you're talking 15, 16 hours a day as standard, right? You're doing your trading and you support trading during the day. You're doing your middle office kind of reconciliations outside of the day. And then your weekends aren't to decompress. Your weekends are for trade ideas and research, right? So getting used to that and surviving in that environment taught me what hard work really is. But having gone through that and being one of the survivors through that meant that I was given trading responsibility really early. Mm-hmm. So the CEO was kind of in his mid-40s, had been quite financially successful before, kind of decided after a year or 2 years, I think exactly, of founding the company, he didn't want to trade day to day anymore. So he was looking for people to take on the trading responsibility. That was where I came in, right? So I'd had a year kind of as a graduate learning the ropes. I'd sat next to the CEO, which is an incredibly privileged position for a 21, 22-year-old kid to sit next to a guy who's got 20 plus years experience, and was basically trusted to take on the responsibility for the primary revenue book there.
And how much risk were you handling at that point as a 21-year-old, and how did that make you feel?
So in trading, we use this kind of metric called value at risk, or VAR. Some of your financial kind of listeners will be aware of that. But I mean, if I was to summarize it in simple terms, it's how much money you could lose in any one day in like a worst case scenario. So you're 5% of worst case scenarios. So on that basis, I was probably looking at about $150,000. So on a worst case, on a bad day, I could have lost $1,000.
Which is a 21-year-old where you're not really, mentally as developed, until 25.
Absolutely.
It's quite a lot of, responsibility and pressure. So would you say that basically set the men from the boys, if you like, in terms of you rising to the top?
So it's really interesting, right? Because psychologically, when you're the head trader or responsible for a portfolio, it's a lot easier than being beholden to the head trader. So if I look at the first 12 months where I was working with the senior trader and was kind of covering for them or responsible for the decisions that they made, that was really challenging because it was like, oh, well, that's their money losing, right? That's their losses, their book. And all of a sudden, when it's your kind of responsibility and your ownership of it, like it's more risk, but it's kind of freeing in a way too. It's like, well, if I lose, I'm losing myself, and it's my kind of thing, right? So I'll make my mistakes, I'll live and die by them. But it was quite freeing, and I remember that was like a real like pressure valve release moment when I was like, we're going to trust you to run the book by yourself.
Yeah, I can completely resonate with that. So would you say that that's, I guess, an entrepreneurial feeling, right? Where you kind of own your own success as well as the failures.
Absolutely.
Would you say that entrepreneurs are born, or are they made?
I think I think the desire and the want to be an entrepreneur is something that a lot of people have, that they have it deep inside them. That kind of feeling of autonomy, of independence, of being your own kind of controller and setting your own agenda and things. But I think sometimes the world kind of dampens that, right? Like the world encourages you to conform, whether that's by education or strict structures in business or, various different career paths. And that's kind of stamped out of you. The people that are brave enough and do become entrepreneurs don't let that voice go quiet. So I think, to answer your question, Eddie, are they born or are they made? I think it's in a lot of people, most people. But the ones that follow through on it are the ones that don't let that little voice go quiet. But there's a big difference between being an entrepreneur and being a good entrepreneur.
Right.
And the good entrepreneurs, I think, are the ones that learn and train and continue growing. It's the crazy ones that start in the first place.
Yeah, or the stupid ones, whatever way you look at it. So let's talk about being an entrepreneur and there, obviously. What's the growth of the business really been like over the last 5 years? I think you started in 2016, so 17 years ago, in 2017, 7 years ago.
Yeah.
So what's that growth been like, and what's that journey been like?
So we started with myself, 2 co-founders, my wife Fatia, my best mate from university, Jono, and 3 graduates and a tech guy. So there's 7 of us to start with. And in the last 7 years, we've grown to 200 people. It's kind of been roughly doubling every year, with some exponential growth around 2019 and 2020.
It's huge.
So it's been a lot. It's been really interesting managing that challenge. And our kind of strategy for the first 5 years was to take a really successful business model that we had within fuel oil, which is the kind of refined product area that I'm trained and an expert in, and replicate that across first the refined product space, so middle distillates, heating oil, jet fuel, gasoline, kerosene, gasoline, heating oil, propane, LNG, so the whole kind of refined product space. And then the last 2 years, we've gone on to kind of looking at exploring that same business model in power and natural gas products too. And that's been a really interesting shift because the business model that we have, liquidity provision, it's known, in the oil and refined product space, like Goldman Sachs, JP Morgan, whoever, last 10, 15 years. This is an established business model, right? It's been there and existed. But in power, particularly electricity markets, newer markets, much more electronic, much more data-driven, there was a lot of skepticism about whether our business model would work in these markets. And I spoke to a lot of experts, people that had been in that industry for 20 years. And I said, look, we're looking to liquidity provide in these markets. Mm-hmm. Do you think that it's actually possible? Do you think the market's going to benefit from this? And they said to me, look, Ayman, you're an oil guy or a refined product guy. Like, markets don't operate like this, right? It's going to be a shock. Funnily enough, we went into some of those markets 18 months ago, and lo and behold, what we had seen in oil and refined products was virtually exactly the same.
Right.
And we put people into trading those markets that knew nothing about electricity, who had then became extremely successful traders. I've got a trader here who is one of the biggest traders that we've got here at Dare, and I'm not even sure if he knows what a megawatt is. But he's an electricity trader and a very successful one, because our business model relies on relative value, on understanding the correlations between products, and it's not necessarily on the liquidity side of the business driven by the fundamentals and analysis that a lot of other kind of business models are. I should caveat that by saying, Eddie, that we are in the process of building a kind of power analytics and development trading team. Mm-hmm. And that's an area we're super excited about. It's just not the area that we've been in for the last 6-7 years.
Right. And let's just touch on your co-founders. How influential have they been in the growth of Dare? Because you're always, obviously you're one of the faces of Dare, you're around on the marketing material and things like that. But you're always super quick to point out, no. There's 2 other co-founders here. So how influential have they been?
I think, thank you for asking that question. I think, none of this would have been possible without them. The first person I spoke to before we even, had a real idea of doing the business was Fatia. And I said, look, I've got this itch. Like, I want to do something. I want to set something up of my own. But it's going to be a huge commitment. And, we just recently got married. And I said, look, if I'm going to invest time in this, then how are we going to do it and make sure our relationship doesn't suffer? Fatia had experience in a regulator environment, previously worked in pharmaceuticals, and I knew had the capability to learn how to do and run our operations team. So I said, look, I want to go on this journey, but I only want to do it if you come with me. And I invited Fatia to run our operations team. And, for the first 5 years, she was our CEO at Dare. So needless to say, the impact of that is second to none, right? I suck at that kind of stuff, staying on top of things, controlling all of the administration, the execution of things, contract negotiation, and she's brilliant at that. So it was amazing to have that support, and truly blessed to have someone to have been there for me at that point in time. And then Jono, who was actually my best friend at university, and we were both really into trading on the come up together and figuring out how to do this stuff. And we'd worked together at 2 previous companies before, and I just knew he was one of the best, if not the best, refined product traders I've ever seen in my life. So when I joined and when I wanted to start this company, I said to Jono, look, this is an idea that I've got, but it's going to be a hell of a lot successful if you're part of the team. And what we could do together is going to be way better than what we can do as rivals in the space. And he lifted the offer.
I've actually got a quote from your wife's LinkedIn post. I'll just read it out. His long-range thinking, fortitude, and his ability to see beyond the horizon and shape our trajectory has been one of the driving forces behind our successes. He's confronted hardships, adversity with grace and resilience, standing tall as our captain, steering the ship through choppy waters, but also demonstrated a rare kind of grace and humility during our victories. To see his dreams manifest into reality is a true testament to his leadership, vision, and dedication. So when I read that out, how does that make you feel?
Humbled, really humbled. For someone so close to you to recognize that and to see you for how you hope to be seen, it's a massive blessing.
Yeah, I saw it and read it, and I was like, that's an unbelievable And those, your partners, are the ones that really see you.
Absolutely.
They see the good, the very bad, the tough days and the downs, not all the successes. So
Yeah,
it was a really, great thing to read. So in that, she talks about sacrifices. And as we know, if you want to do anything, there's always sacrifices. So what kind of sacrifices have you needed to make to reach this exponential level of growth, basically?
I think if I had to summarize it into one thing, it's focus, right? And it's basically like an all-consuming focus, right? This business, for myself and for Fatir and for Jono, it's been all we think about for the first years of our business, first 4 or 5 years. It was an obsession, right? There is no working hours, there is no time off, there is no work-life balance. We're growing this business and we're all consumed by it. And like you said, Eddie, right, whenever you try and do something at a really high standard, something else has got to give. So what gave? Well, for me personally, it was my health, right? Like for a long time, I was significantly overweight. I was eating too much, not having time to go to the gym. I'd be remiss not to say that my personal relationships outside of work suffered. Staying in contact with friends, with family, this kind of stuff. Luckily now we've reached a level of success where the work-life balance is much better and we can reconnect and heal and do these things. But I would say to anyone going into business that if you think it's going to be easy or think that, you're going to be able to do it without something sacrificed, you're going in with the wrong expectations.
Yeah, I mean, one of my questions to you, the next one was, do you really think that if someone's truly successful at something, they have to be obsessed to the point of obsession with that mission? Because when I look at any successful person, there's no substitute for hard work. Sure, there's luck along the way, but you have to be thinking about it night and day, and it's all consuming, basically. Would you?
I completely agree with that. I think certain people have certain blessings, right? And you can get to a certain level of comfort in life if you're one of those lucky people that are blessed. But if you want to be truly world class and at the pinnacle of whatever industry you pick, then you have to work hard because your rivals will be.
Yeah. And let's elaborate a little bit more on the successes and failures and trials and tribulations of running a business. Were there any moments in the early days, and it's particularly obviously the early days, where you thought, I'm in over my head here, or there's something, that could be catastrophic here?
So it's interesting because luckily, having traded at 2 relatively small companies before, and also at my previous firm started up a desk in the area that I was going to be in, I'd seen a lot of these risks encountered firsthand already. So the kind of operational side and the trading side of the business, there wasn't actually any moments where I thought we're in trouble here, right? That was good. What did happen a few years down the line, which were probably the trickiest moments that I've had in my tenure as CEO since founding Dare, and then there's 2 events that stand out, right? There's the buyout of our initial investors. That was an extremely stressful process because it was like negotiating a divorce with billionaires who've got nothing to lose.
Can you just, for the audience, elaborate a little bit and set some context behind what's going on there?
Yeah, absolutely. So when we started the business Dare, we started it with a multi-billion-pound investment from a US-based private equity firm. And they were a significant shareholder in the business, and we'd had a really strong 5-year period as partners with them. Mm-hmm. We returned, what is it? Exactly off the top of my head, it's 70 times their initial investment in 5 years. Wow. So you imagine you put in 2 million, you get 140 million back. In that agreement that we had with them, partnership agreement, we had an exit clause. And it said if either party at any time wants to go independent, then the other side can give 6 months notice and we can split away. So I went into our agreement with them thinking, okay, well, look, if the day ever comes where they've made a good return and, as they should for backing a young founder, but I feel like they're not adding any more value, then I can pull that thread and we can go independent and we can stay friends. And throughout our kind of tenure as collaborators, the relationship was super friendly, right? Like the best possible guys that you can imagine, getting dinner with them, super friendly, Americans, charming and everything.
Mm-hmm.
And when thread was pulled to separate, it was a shift. It was a huge change. And all of a sudden, we're in an arena which I'm not familiar with.
Yeah.
Right? We're doing private equity style negotiations with corporate lawyers and clauses and words and things that are not in my area of expertise.
But it's in their area of expertise.
But it's their bread and butter.
Yeah.
And they're more powerful than me, they're richer than me, and they got nothing to lose. So that was super scary, right? Because it's like, well, look, if these guys want to be petty or they want to squeeze me for whatever reason, then they have the capacity here to close this business. So dealing with that, being so far out of my comfort zone, and the learnings that came alongside that was super challenging, super tough.
Yeah, I think, well, that you'll tell me, but this is one of the key skills of being a CEO, right? It's not you step outside from being that trader to, legal, accounting, and being aware of all these different things. So how important would you say being, and I spoke to a very high up person at Morgan Stanley very recently who determined resilience as not the common thing that you would maybe think of, but adaptable and flexible.
Yep.
To many different things from a business perspective, but from a CEO perspective, how flexible and adaptable do you have to be with what's in front of you, and how important is that to actually the success?
I think essential, absolutely essential. You got to be so flexible and adaptable to the situation, and if you don't have skills in certain areas, you have to have the ability to recognize that and bring in that expertise around you. One thing that I've learned only through experience is the advisors that you choose around you, professional advisors or personal advisors, are so important, and they can have a huge influence on the end results. And oftentimes it's not enough to simply rely on previous experienced people to give you recommendations on advisors. So that's what I used to do, right? When I started the business, I used to ask my executive friends, who's a good accountant? Who's a good lawyer? And I just go to those firms and be like, okay, well, I've got, Jimmy's recommendation, they must be good. But what was good for Jimmy might not be good for Ayman, right? And to actually think about that now, whenever we hire a professional advisor, we'll go and talk to them first, and we'll have a rigorous set of questions and basically like a hiring process for these advisors. And it's so important to be able to go into that mindset and mental mode of, what do I actually need out of this relationship? Where am I weak? And that's where the adaptability and the flexibility comes in, right? If you look at every problem just like a trader, where's the bid? Where's the offer? How do I buy this cheap and sell this expensive? Well, that's not how a legal contract works, right? There's a subtlety to it. There's a language element to it. You have to learn that, or you have to find someone who can explain it to you or lead that for you that you trust. And if you don't do that, then you're setting yourself up for big challenges in the future.
Decisions make or break you as a trader or a CEO. So how does your decision-making framework work, and has it changed over time? What was the steps that do you have a framework or steps, or is it more of a gut feeling of like, this doesn't feel right, or I think this guy or girl or team is going to be good?
I think intuition plays a part in it. Speaking to informed team members plays a part in it. Strangely, speaking to uninformed team members also helps to get like a fresh take on things, right? If you're asking someone from completely outside the area of expertise, they may frame something in a way that you haven't thought of before. But to distill it down to its simplest form, I look at decisions as kind of reversible or irreversible. And as you'll know, Eddie, right, speed is so important with a startup and a scale up and in business to be successful. So making a decision has always been better than making no decision in my experience. And if it's a reversible decision, then I'm very quick to make that decision and just experiment, A/B test it. If it works, great. If it doesn't, okay, we'll flip it back. In those rare instances where it's a irreversible decision and the dynamics change completely after doing it, those are the decisions that you need to spend a lot more time, a lot more kind of thought, energy, advice. But ultimately, these are big decisions, right, at the top of an organization, and there is no right answer. And as a CEO, you've got the perspective, the only one who's really got the full perspective to make that informed decision. So you have to just pick a course and go with it, being comfortable that you might be wrong. But that's both the thrill and the dread of being an entrepreneur and a founder, right? You live and die by these decisions that you make. For me, that's everything. But for some, that's terrifying, right?
And being a trader first, and we just talked about VAR, value at risk. Did being a trader help you in some parallels where you're like, okay, this guy's got 6 months, it's either make or break. My value at risk is $1 million or 2 million, and you can cut it. Does that?
I completely, yeah, absolutely. And no, you're spot on with that, because as traders, as risk takers, we always look at what's my worst case, right? What's the stop loss on this kind of trade or pattern or portfolio. So taking that kind of mental model and applying it to CEO decisions or exec decisions is really helpful, just to know, right, well, this is my worst case.
Yeah. And from that transition from trader to CEO, what are perhaps some obvious things and non-obvious things that you've kind of, come to be over time?
So I guess one of the most obvious things as a difference between being a trader and being a CEO is, as a trader, the results of your work are quite instantly identifiable.
Instant feedback.
Exactly, right? You get that P&L hit, you get to see what your position is, and you know whether you've done a good job or not.
Yeah.
As an exec, there's a huge lag time, right? Sometimes it might be months or years before you see the impact of your decision, right? You hire a trader, you put them through the program, you may think they're good, but you're not going to know if they're really good until 12, 18 months down the line. So that's what I would say is probably the most obvious thing. The least obvious and biggest advantage that I've taken from being a trader and taking that on to being a CEO is, I would say, the importance of direct communication. So Eddie, you'll have been on our OTC trading floor and you'll have seen how the traders communicate with one another. It's very direct, it's very plain. It's borderline blunt at sometimes, but the message gets across. Mm-hmm. Now, when you first think about being a CEO or an exec, you think about hedging your words or being polite or, how to frame things in this kind of political, softly spoken way. But what I've learned is actually high performers need the facts and they need that directness, and then they can go execute in line with those kind of parameters that you set them. So that's something I've definitely taken on board, keeping that directness, keeping that lack of kind of politics on what you say, and just being really clear, like, here's what I need, and this is what the outcome is going to be if you succeed or if you don't, and letting your team execute in line with that.
Yeah. And how do you feel about creating a culture and an atmosphere, a la Ray Dalio, where the best ideas from whoever it is are able to raise to the top? How do you feel about creating that? Does that take work, or is it something in the people that you hire or the management team? How do you think about that?
So I think that idea, and I've read Ray Dalio's book, and I'm a big fan of the way he's framed things up, is an attractive one, right? The best ideas win. Well, who's going to argue with that? No one, right? But who defines what the best ideas are? And when you poke a little deeper into that system that Ray Dalio's built, well, ultimately, he's kind of set himself up as like the arbiter of truth, right? So the best ideas come from him, and you can't really out-scorecard him. So I feel like there's a little bit of a lack of authenticity there, right? It's like, by definition, the best ideas come from the people that we've ranked and have got the best ratings in our scorecards and have got the most experience. And if you're new and you're fresh, well, then we put a low ranking on you. We'll tell everyone they can speak, but we'll ignore half the ideas, blah, blah, blah. What I say here at Dare is everyone should speak, and you should share, and you should ask your questions. right? Even if you feel that they might not be the smartest questions, ask your questions, but recognize some people have expertise, some people have experience in a certain areas, and look, this is how the world works. They are going to be listened to more than you. Two ideas on paper are quite difficult to compare sometimes, but it's much easier to compare who's saying the idea versus who's saying the other idea. And if it's a question between those two, well, I'm going to go with the experienced hand, and I'm going to tell everyone that. And it's just a transparent way of doing things. So I like the idea, but I think in practice, there's some nuance to it that needs to be considered.
Just for the audience to like kind of feel it. Obviously, I've been on the trading floor. You've spent your whole career basically there, or half of it at least. What is the trading floor like? Because I think listening to this and actually being there, when you see, I was on the other day on your old desk with two of the guys, and their P&L was swinging, a couple 100,000. That's a house, but your P&L at times was swinging 5 million, which was quite normal. How do you deal with that? Or how do you convey what that feels like to a non-trader who's never been in these positions of risk, where that's more money than many people, of course, will see in a lifetime on a second-by-second basis? So how do you convey what that feels like, and do you get desensitized to that over time?
I think it is really difficult to convey for someone who hasn't been on trading floor, right? The only example that I can use for people that haven't been in that environment is kind of similar to competitive sports. But competitive sports where you really care about the outcome, not something that you're just playing for fun. So if you're on a football team or a basketball team, rugby team, whatever it is, but you really care about that next point, and your teammates are relying on you, and you've got a shot to score, or a basket to hoop, or whatever it is, that's similar to the pressure. And it's not a financial loss if you don't win, but you've got that kind of camaraderie loss, that moral kind of feeling of letting your team down, right? And that weighs heavy on people that really care about sports, right? So it's kind of similar to that. Regarding the desensitization point, I think that's the right word, right? Because when you're dealing with these amounts of money and your P&L is moving, whether it's 100,000 or 7 figures, you're in that position because those numbers to you are a small percentage of what you're working with, right? If you're managing a $100 million portfolio and your portfolio is moving $1 million, well, that's 1%, right? We can all kind of contextualize a 1% move in our ETF portfolios. We're not going to probably lose any sleep over that if we're an investor. The numbers are large on a nominal basis, but when you're actually thinking about it in the context of here's what I've made this month, here's what I made this year, then you can't get attached to it. And if you do, then trading's not really a career for you, because it's not about the numbers, it's about the relative size.
So what's the most amount you've made in a day and lost in a day?
So the biggest amount I've made in any single one day is $10 million.
And that's you personally, not the desk, just you?
That's me personally, with 3 support traders sitting next to me. But the risk and ownership and decision making around that was myself, and that was here at Dara 3 years ago. The biggest loss day I've had was $4.5 million, and that was the following day.
Does it tend to happen like that? And I guess into the behavioral economics of like the big losses, you feel overconfident, you jump in, you think, oh yeah, I can do another 10 million day.
Yeah, it's there's definitely an element of that, but it's interesting because the way we mark our P&L and where a lot of kind of investment banks and asset managers mark their P&L is what's known as mark to market. So you take what you have on as your risk, and then you have the market price on it, and that's what you've made. But it's not realized P&L, right? It's just what your positions and your portfolio is worth. So I went home that day having made 10 million thinking, I don't think I can actually exit my portfolio here, right? Like, it's worth it now, and I need to wait for more liquidity to come in, a bigger market in Asia, and to try and, unwind my position. But I'm not getting too attached to this number. And then obviously next day the market moves in a different direction and you take it, and that's fine. It hurts to lose 4 million in a single day. Of course it does, particularly if you get attached to that 10 million. But when you zoom out and you think, well, I just made 6 million on 2 days' time, you feel a little bit better.
Yeah. I've spoken with some of your right-hand men and women, and they've described you as a bit of a Rain Man, and you didn't pay me to say that. How do you get so immersed in that flow state that they've described to me, where some of them have described you as like a machine? Like you're just so into that feeling. What helps you get into that? Or is it something that you just can't describe? Or is there, a routine, or there's certain things that get you into that? Or is the money enough?
I think it takes a while to first feel comfortable on a trading desk, right? The first few months were, when I think back to being a graduate, it was really uncomfortable, right? The pressure's there, you don't feel safe, you're nervous. And it takes time to first get comfortable with your administrative responsibilities, then to get comfortable taking risk, then to get comfortable putting on risk. And it kind of develops over time. I think it's only, in the last maybe 3 or 4 years of my trading career that I felt that kind of level of comfort, and that ability to, what you described there is I think fair, to get into that flow state. Once you kind of recognize what that feels like, and you recognize the kind of inputs of the market, just being there kind of puts you into it, right? It's like just stepping into the car and it's like, okay, well, this is my safe place, this is my comfort zone. So it's not super conscious, but it's I think a combination of a variety of things. Like it's the same pricing sheet I've used and experienced, same risk system, it's the same people around me, it's the same seat in the same place. And that's like my little rituals, right? Like these are all like the same things. And it's like, right, now I'm completely plugged into the market, talking to the same people, looking at the same price on the same screens. I know what's going to happen next.
Some have described you as that force when you're trading, and described some scenarios actually where you've been in such a mindset where you've actually put your competitors out of business. And for the audience that's listening to you, sat there, eloquent, obviously incredibly intelligent, can you just help the audience kind of understand the motivation behind that? Because obviously that just doesn't come across because you're CEO, Ayman, not trader, Ayman.
Yeah. It's an interesting one, because trading, and particularly liquidity provision, is what's known as a zero-sum game, right? So there is a certain type of trade that is on, and the fastest or the first to spot it is the one that will capture the edge on that trade. If you don't, you won't continue to exist as a viable business for the foreseeable future. Our trading style as a firm is designed to be that competitor, to be that first mover, and to go in and dominate markets, right? So as a consequence of that, that does mean from time to time, competitive firms may go out of business. Now, do we take pride in that? Do we go out to achieve that? No, that's not what we're here to do. We're here to create a really good business, be proud of the work we do, and be the best in our area. But is it a consequence of doing that? Well, yes, this is a competitive space. It's a business. And like anything in life, in any kind of business, right? If you have a really strong franchise, then more often than not, there'll be a small business or a competitor somewhere that suffers. It's not what we set out to do, but it's a consequence.
Yeah, absolutely. And, it's the done thing, right? It's business, it's the cost of doing business, right? And when you look at other firms that want to be number one, if you look at trading firms or market makers or, investment banks, it's cutthroat. If you want to be number one, there's going to be consequences. So when you look at firms today, and individuals, leaders, maybe some that have passed, who do you aspire to be as a person, and what firms would you hope to envisage in the future for Dare?
So the firms I take inspiration from most are those that come in and disrupt conventional industries with no right to do so. And the kind of classic, most recent example that comes to my mind is Red Bull Racing, right? They've gone into Formula One and they're competing against Mercedes, Ferrari, Renault, McLaren, and they're the top team. They're a drinks company and a marketing firm, but somehow they're capable of building this fantastic Formula One chassis, engine, aerodynamics, this whole team, and they're dominating the sport. How have they done that? What processes, what organizational structures, what analytics have they done to get to that place? That inspires me because I see a lot of kind of similarities between that business model and what Dare's trying to do.
Right. I was just going to say that you're entering a market that's not new, right? But you're not looking to disrupt, a new market that's just been created and unknown. You're stepping into an existing market with big incumbents.
Yes.
And you're looking to shake it up.
That's exactly it. You look at Red Bull, they've got Ferrari, Mercedes, McLaren, we've got BP, Shell and Vito.
Right. So do you like being the underdog?
I do. Yeah.
Right.
Motivates me.
Right. So perhaps in the future, there'll be a point where you're not the underdog. How does that make you feel?
I think we'll cross that bridge when we get to
it. Big dreams, right?
Yeah. But no, on that, it's interesting. The analogy that comes to mind is, a lot of your listeners and a lot of us sports fans will have seen Michael Jordan's documentary, The Last Dance. And one thing that I really took from that was when he's on the basketball court, how he would invent slights from his opponents, right? And he'd just find something to make him feel like, I need an edge, And I think there's a real power in that. And whether you're big or small or on the come up, finding something to motivate you, finding an enemy, I think it's really powerful. And I don't want us to ever lose.
Right. So who is your enemy? And, what kind of things motivate you really? Is it saying, oh, we've got to be the biggest, or they're laughing at us, they're not as big as,
Yeah, I mean, look, we've got some names, but I can't reveal that on this podcast.
For the next one, right? Let's talk about recruitment because, you've got an incredibly innovative recruitment process and you've spoken about your experience, one that, I very much admire. I always thought, if I just had the platform to show what I could do, many people, young people are seeking that out. And you obviously thrived in that type of environment. Not everyone potentially would.
Yeah.
How do you identify resilient traders or those that are going to make it? They've got the core skills, and what are the core skills and traits of that, really successful trader, even maybe before they've even shown what they can do?
Yeah. So we run some quite rigorous psychometric tests on all of the traders who join Dare, and we do that first, right? So we do that before we look at your CV or your experience and all of this stuff. And the results of that assessment create a profile for each of those trading applicants. And that trading profile is then compared to an average of the senior and most successful traders at Dare. So we've got an internal profile of a board of our guys and girls who have done really well. And I remember asking the psychologist who put together that profile for us, well, look, guys, what's the traits here? What are the things that all of our traders have in common? And they were like, well, look, some of them are aggressive, some of them are risk takers, some of them are conservative, some of them are calm. There's a real broad spectrum here. There's not really anything that stands out except one thing. I was like, well, what's that one thing? And I was like, all of them have an inflated opinion of themselves.
Really? Okay.
So that was the one thing. So for better or for worse, you need some sort of kind of ego, or if you want to describe it as self-belief. That's the one thing we probably can't train you in, right? Because trading, financial markets, they're going to give you knocks, right? You're going to have setbacks. But to have that self-belief that you can learn and develop and actually kind of be a bit delusional about thinking how great you could be is helpful in those situations. And we've seen that time and time and again.
And just for the audience as well is, when you talk about aggression and all that, people think, okay, big, guy or something like that. But that's not like that on the Dare trading floor. There's many women and, the dominating market. So it's really a mental and like I think self-belief
Yes.
was a really key phrase that you use. That's what it's like, right?
Absolutely. Yeah. Self-belief, confidence to get after things, and a clarity of what you're trying to achieve and not hesitating. And I don't think that's, attached to any one specific type of personality or, certainly any specific groups of people. It's a mentality.
Yeah. You're very, let's say, open to individuals of any background, the way it absolutely should be, in my opinion.
Yeah.
But you're very cutthroat when it comes to those that are not performing, to cut them. Can you walk me through that decision making of why, how long it takes to understand if someone is actually really, cut out for this business, and whether people can turn it round as well? Because, you could say, oh yeah, 6 months, but, as we know, life's pretty dynamic. It could be 3 months, it could be 9 months. And, you could cut someone out too early that is just, getting their feet under the table and could turn out to be the best trader ever.
Yeah.
Could you speak to that a little bit?
Absolutely. I think it's really tough to know when and if someone's going to make it, and particularly when they're struggling, right? What we've done over the last few years at Dare is build a really strong support network around our traders. So the traders have access to CBT therapists, to nutritionists, to personal traders. So we ensure kind of all of the holistic aspects of their health are looked after so that they can focus, so that we know, like, okay, if this person is underperforming, there isn't some exogenous reason for it. It's actually a performance issue, right? To find that out.
So isolating pure performance.
Exactly. But, if I look back on some of the earlier days, there's a trader here, a very successful trader, who was actually our biggest trader here last year. And I was going through some old emails and I saw a letter that we drafted to him from our people department, which was to make him redundant because, he was going through some difficult times at that point, some health issues,
right.
Hadn't been able to show his full performance and hadn't really shared that with us. Once that became clear, then, okay, we worked out an arrangement for him to stay with the business and to, continue to progress in his own way. But that just goes to show and reminded me of how difficult it is. It's so easy to dismiss someone so soon. And I look back on that and think, we'd have got rid of that person, then that could have been a real fundamental loss to the business. We didn't, and look where we are now. So we're definitely along the lines of trying to give people every opportunity to prove themselves. We're really proud of our retention here at Dare now. It's 90% on the graduate program, which is incredible. Compared to most financial institutions, that's supreme. And the people that leave, it's pretty much a mutual decision now, where it's like, okay, look,
it's not right for me.
You. Are you enjoying this? Do you really think you're going to make something of this? Because the support is there. I think that's how it should.
Yeah, I mean, I've been on the trading floor and it's a wonderful environment. You can feel the competitive nature, how it should be. But it's one of productivity and, you can really, it's palpable, what you can feel in the air. So, it's very much credit to you. Staying on a similar topic, Dare's known by those internally as a business for taking big bets. You aren't afraid to venture into the unknowns, and you speak very openly about your failures, and you've had big bets that haven't worked out. So what's your approach when you're taking those corporate level decisions, not trades, which in your previous life, and how do you know when to pivot?
Yeah. I think it's hard to articulate where inspiration comes from. I think a CEO's role and an exec's role is to stay informed, to keep aware of all current events, developments, changes in the landscape, changes in business, and then seek to apply the impact of those changes to the business before the business is impacted by those changes. We've seen things like AI, right? We've seen things like the electronification of various markets globally. We're obviously seeing the transition to net carbon zero affecting all of our lives. And I think it's the CEO's responsibility to stay aware of these things, to look for ways that we can contribute and benefit and aid society from these things. But what's the process for really coming up with a decision or a vision or a new direction? It doesn't sound very scientific, but I'll read about it, I'll think about it, I'll discuss it, and then I'll do it. And sometimes it works and sometimes it doesn't. I wish I had a better answer for you, but it's intuition.
Right. And an out there question: what do you do this all for? What's your what do you get out at whatever time you do, and you've been through all the stresses and strains? What do you do it for? Who do you do it for?
I used to say that I was doing it for my family, and luckily Dare has been very successful as a business. Financially, we're secure, and those kind of wishes and aspirations are kind of tied off now. Why do I keep doing it? I'm really tempted to give you Steve Jobs' cliche about making a dent in the universe,
right?
But it's not true, right? I do this because it's fun, right? I enjoy it. There's no other reason, right? I could be on a beach, but I'm not, because I love my team. I love what we're trying to build, and I'm excited by it. So long may that continue.
And how important do you think that is, where finding your ikigai, where the intersection of fun and your passion and all those different things that also makes money and is competitive and is a business? How would you say you found that now?
Yeah, I absolutely would. I feel very lucky to have found that. It's hard, and I see a lot of founders setting up businesses, becoming very successful, and then selling those businesses.
Right.
And I completely understand why they do that, right? The returns from doing that are great, but it says to me at probably a core level, they weren't in that kind of ikigai place. They weren't in that zone of genius, right? Zone of excellence, perhaps. But if you're not really enjoying what you do, it puts a cap on your timeline.
And moving forward now, looking to the future, as we like to do, can you share your master plan? And also just in terms of the operating metrics about Dare now, how profitable are you? How much money in terms of revenues and margins have you made since inception? What's the market opportunity here?
So in terms of the plan moving forward, we want to be the largest liquidity provider in commodities globally. So we're looking across oil, gas, power, electricity, agricultural products, metals, whatever there is out there in the commodity space to trade. We want to add liquidity to it. We want to narrow the bid offer in all of those markets, and we want to compete. In terms of the size of the opportunity, I think it's massive. We're looking at every commodity market in the world, and we're looking at the financial products within those spheres. I think there's easily a $10 billion a year business here. In terms of where we are today, in the last 7 years, Dare has done $1 billion in revenue.
Wow.
And last year we did $100 million of EBITDA.
Wow.
In terms of our KPIs moving forward, I push our operations teams and our trading teams to get us into new markets, because these are tricky operational challenges. They're new landscapes which we need to learn, and to perform well and trade well in these markets, you need a strong foundation, both with the technology and the operations and the trading. So getting into those markets is the biggest and most important first step.
Well, some serious numbers there. And just to end this off, what would you like your legacy to be?
I would like my legacy to be that, hey, here was Ayman. He was a guy who built a fantastic trading business, who trained a whole group of successful traders, but managed to do it with grace, kindness, and respect. Right? Whether the business succeeds or fails, we'll do everything we can to make it succeed. But I want to be remembered as a good person, a respectful guy, and someone that was kind.
Very, very well said. Well, Ayman, thank you for doing this. It's been a pleasure.
Eddie, pleasure. Thank you very much.